Thanks for stopping by and checking out this video from NetPicks. In this video, we're going to talk about some MACD strategies for trading cryptocurrencies. And when you trade crypto, all right, you don't need some elaborate trading indicator or elaborate strategy to find some success. When you use the MACD, when you're trading crypto, it's actually a really good way to measure momentum and the trend direction of whichever currency you're trading. Now, briefly, it's an indicator that's developed by a guy named Gerald Appel. It's an oscillator. It uses two EMAs, which are exponential moving averages, and essentially measures whether price momentum is up or down using these two different averages. And up above, you can click that link and watch that video covering the MACD in greater detail. So here, you're going to learn how to apply the MACD to trading cryptos, including the two biggest ones, Bitcoin and Ethereum. Now, cryptos, for some people, they seem really complicated, right? But essentially, you could trade in the same way as other instruments. They have a great ability to trend, and they're going to, at times, they're going to consolidate. Now, both of those market conditions, they'll give us excellent opportunities to get involved with the currency. And most charting packages, including TradingView, which is my favorite, it's going to have the indicator just pop it on the chart. I don't use the histogram at all, and all that is a visual representation of the distance between the slow line and the fast line. And let's talk about best settings. When you look for the best settings for any indicator, it's actually a rabbit hole. You just don't want to go down. Now, there may be some validity in having a faster reaction of the indicator to price, but the time spent that you're optimizing could probably be better spent mastering your own strategy. So we're talking about the MACD. The default settings are the fast line is a 12-period EMA. It's actually minus the 26-period EMA as well. The slow line, it's the signal line, is a 9-period EMA of the MACD line. The MACD line is the fast line. My own use of the MACD is I actually use it as a 310 oscillator. And there's a link to a video above where you can check out that indicator. And another setting that I have used in the past is 8, 17, and 9, which is used for more of a multiple time frame trading approach to determine trend direction. And we'll talk about that later. Now, there are a lot of people out there who are writing to use just the crossover of the MACD lines for your buy and sell triggers for crypto trading. Really, the only way I would consider the crossings of the averages as a signal is if it were combined with some type of price action. And that could include support and resistance, breaking or holding. In my own experience, I find that the best uses of this indicator, there's 4 really good ways to use it. Bullish divergence, bearish divergence, a quick way to scan for consolidations, and trend direction. Now, traders will still want to understand price action. Okay, you don't want to just rely on any trading indicator. So let's talk about divergence. How does it get created? Essentially, we're going to see the MACD showing the momentum of a crypto. Okay, and now we're looking for price to head in one direction. The momentum indicator is going to head in another direction. This is usually seen with peaks and valleys in the indicator, but it can also be seen with just the slope of the lines. And this is a good example of bearish divergence. So we see price put in a higher high. The MACD is showing weak momentum as it's heading to the downside. We can even see that fast line has crossed under the signal line. Okay, so there's no mistake that there is divergence between the direction of price and the momentum of price. If you use a simple trend line break as part of your divergence strategy, we would either short Bitcoin or exit some of our position. Now, when you are using trend lines, it is vital that you have rules that dictate how you draw them. Okay, and there's a video that you can watch, shows you my approach to drawing them. You can enter the trade short on the close of the candlestick or upon the break of the trend line. Some conservative traders may wait until the support level is broken before entering. To look at bullish divergence, we're going to check out Ethereum. And I know some traders don't always like to trade daily charts, right? So this is going to be a 4-hour chart of Ethereum, and it's going to be a bullish divergence trade. Now, it's not a perfect example, which I'm happy with, okay? But the important thing is that you understand the concepts of what you're learning. So we see price puts in a lower low, while the MACD is actually showing momentum to the upside. And a simple trend line break gives you a trade entry. And if you use a stop loss in crypto and you're not just buying and holding, you can use the extreme of the low candlestick for a simple stop placement. Now let's talk about a consolidation strategy. Now we all know that markets trend when they consolidate. And while trading in consolidation itself is pretty risky, all trends will start with a breakout from a trading range. So we'll look at the MACD. We can quickly scan a chart to see if the momentum is showing the potential of a trading range forming. And sometimes this will show up on the indicator before price makes it clear. This is Litecoin. And if you look at the MACD, you can see the lines are wrapping around each other. You can see the indicator is showing consolidation before confirming with price. And for this example, I just put the histogram back on so you can just get a better visual of the distance between the lines. A trader could buy the breakout, could wait for a pullback on a lower time frame, or position inside the range itself. Okay, there's a lot of different ways you could trade this. And the best way is really the best one that's going to fit you as a trader. So let's just dig a little bit deeper in this example. And it's not going to be a complete breakout trading tutorial. But you can see that price has a support level inside the range. And I showed that with the dashed line. Price is also ranging near the resistance zone of the larger range. That's bullish. Traders can position inside the range when the price action gives opportunities. Your position is then carried to profit when price breaks out. Now in this example, because of the support inside the larger range, for your protective stop placement, you could just tuck it under the low of that smaller range. Higher time frame trend. And when I first started trading, I began to look at Fibonacci. I thought it was some magical way to trade. And I no longer consider it as a strategy. I haven't for years. But I did pick up a pretty great tip while I was learning it. When you use the MACD on a higher time frame, and then you trade in the direction on a lower time frame. So for instance, you would trade the weekly trend on the daily chart. Now the settings are going to be a little bit different. 8, 17, and 9. And you can see that those are just a little bit faster than the default settings. But that makes sense, as a slower MACD will give up a lot of price movement before the weekly changes trend. So the chart on the left here, it's a weekly chart using that different settings we just talked about. On the right is the daily chart. That MACD is using the default settings. That black circle highlights the MACD line, it's the blue, crossing the signal line, the orange one, to the downside. So this indicates that trades on the daily chart should be short trades only. Now this daily chart has several standard price patterns shown. We have a rally, so mean reversion, and we have trading ranges. And while not an example on this chart, we would be looking for bearish divergence on the daily chart to get short. Let's talk about day trading. I'm going to use another example so we can look how to use a higher time frame when you're day trading. So on the left is a 30-minute trend. Okay, that's what we're looking for. And on the right is a 5-minute trading chart. So we're going to trade the 30-minute trend on the 5-minute chart. I intentionally did not add any labels to these charts. Okay, I want to give you a start on seeing things for yourself. But as a hint, I did use the dashed lines to show the trend direction change on the left chart and where that matches up on the 5-minute chart. Another hint, there were great trades in both directions using simple chart patterns on that 5-minute chart. Let's wrap it up. There is no best setting for any technical indicator, including the MACD, that doesn't diminish the usefulness of the indicator. You learned about trading with divergence, which can either be used for trend reversals or just the reversal back in the direction of the current trend. Cryptos, they will consolidate like any other instrument. The MACD can alert you early on in that consolidation. So having a way to trade that market condition, right, a range market, it's vital. using the higher time frame trend as the direction of smaller time frames is a viable approach. Okay, you don't need complexity to trade. Just pick a few simple trading patterns along with a measure of momentum. That alone can produce some really decent sized gains. So just feel free to expand on the strategies that we just talked about for your own crypto trading with this MACD. You're going to find some strategies and approaches that suit your personality, and you'll discard other ones. Anyways, thanks for watching. Hit like, hit subscribe. Any questions, pop them below, and I'll get back to you. Thanks for watching.